The Fed also changing its reporting a little bit this year, holding press conferences after every FOMC meeting, which will make it a little bit harder to predict when a hike is coming. But just about everyone is in agreement about tomorrow's announcement. Do not expect any changes.
Don't expect a rate hike at this meeting.
Zero chance.
2 out of 2 experts agree the Fed will not hike rates at the end of their 2-day meeting on Wednesday.
They've really softened their tone lately. And with all the uncertainty, not only from the trade dispute, but any economic hangover from the government shutdown, it's going to be very difficult for the Fed to have much visibility going forward as to when they might raise interest rates next.
But that doesn't necessarily mean we're off the hook entirely this year.
I think the expectations now are that the Fed is not going to hike rates at all in the first quarter and maybe not at all even in the second quarter. But that doesn't mean that they won't hike rates at all this year. Later on in the year, they might hike.
So what does that mean for consumers and their money? 3 things.
As a borrower, pay down debt, particularly variable rate debt, and favor fixed rates over variable rates. As a saver, rising interest rates are going to be a good thing. Continue to build up your cash reserves so that you're in a position that if we do get an economic downturn, you're better able to weather that, having paid down your debt and boost your savings. And third, as an investor, stay the course.
Most experts I've spoken with think the Fed will stick with 2 rate hikes this year, more than likely in the back half of the year. Some of them, like Tendai, think the Fed might regret hiking twice as the economy slows down heading into 2020. But as for tomorrow, it is all but certain the Fed won't do a thing. The CME Fed Watch tool, which predicts hikes, saying the probability of a hike tomorrow, 0%. So really, no one thinks it's going to happen.
Gotcha. Good deal.